Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
The U.S. equity markets, it appears to me it's kind of an empty shell. Yes, they're still growing, but there's only a few companies promoting the growth of the indexes, and yet people are saying that's where you have to be, but it's only Amazon, a handful of others really holding up the whole thing. What's happening underneath, and what is that telling us?
Well, I'm seeing the same thing, and one of the things I do is monitoring, I guess you'd say, the health of the advance. I look at some advanced decline stuff, some internal strength data, new highs, new lows, a number of things, and compare it one cycle to the next, one intermediate term cycle to the next. And as you come out of a normal, healthy 4-year cycle low, a low of a higher degree, and we had the 4-year cycle low back in 16, what you normally see is if that cycle is healthy and expanding, is the internals of one intermediate term advance versus the next intermediate term advance, it'll continue to expand. You see expansion, you see volume, and the internals are very positive, But what we've seen is a continued deterioration. Each intermediate term advance has been on less and less, internal strength. Yet it continues to hold, and that's one of the almost discrediting things. People like myself and other guests, I'm sure you have. I've heard of. I don't listen to too much other stuff, but I know there are a few people out there that see this for what it is, and that's one of the things that's discrediting. On the one hand, it continues to hold up, but we're monitoring and seeing the technicals, the underlying technicals, exactly what you're saying, and it is what it is. I mean, I maintain a train wreck waiting to happen, and nobody, it seems, understands that the sheep are nice and asleep when it comes to equities, it seems.
Are we setting up like we did 2 years ago when we had that horrible Friday in August?
Anything can happen. What we're setting up for eventually, Jim, and like I have said, it's not an excuse. I mean, it is what it is. Every technician, and again, I want to clarify this. I want to make it perfectly clear. It is not an excuse. We have our technical tools, and Dow theory and cycles and statistics, and the Elliott wavers have their Elliott wave, and what we have seen, regardless of the discipline, is one heck of an abnormality. I was talking to Peter Eliades last night. Technician's been doing this stuff. I mean, he's in his 70s. And, it's extremely abnormal. This is not normal. And again, I stress this is not an excuse. It shows the degree of the abnormality and the fact that it is a bubble when we're operating so far outside of the realm. And so what I think ultimately we're setting up for is when we see, in my world, the DNA markers fall in place, when we get the proper setup with the Dow theory, stuff that we need to see, and we get a primary trend change, and when all this stuff falls in place, then we're going to be in a position for this bubble to unwind. And I think that it's going to unwind with vengeance. And the thing that I think that makes this so bloody dangerous is the fact, a couple of things. Number one, people have accepted it because it's went on for so long as some kind of new normal, and so when it begins for real, they're going to think, it's not a big deal. and they're going to find themselves slaughtered when looking for a bottom when it never comes type scenario, I think. And number two, like you said, but from a slightly different angle, is that it's not organic. And I think that's what makes it, it's like, the bull market following, World War II. That was real. There were jobs and prosperity and so forth, and it was a real secular bull market. The bull market that we experienced through the 80s and into the 90s with the dot-com bubble, hey, that was real. This one, it's, pardon my frankness, it's bullshit. It's induced by cutting interest rates and manipulation and all the central banks around the world manipulating and seriously? So from that perspective, yes, we're at all-time new highs, absolutely, and it's extended and it's blown out every historical norm on the planet. Well, I would argue the largest bubble in history. So yes, it's real from that perspective, but it's not organic. And so what I'm saying is I think it makes it an even more dangerous situation, I think, and I don't believe that it can be held up forever because there's no bubble that's ever been sustainable, ever. I keep asking someone, send me an example of any sustainable bubble, and you can't. And so eventually we're going to see, like I said, the setup to cap it, and when it does, it's going to be very dangerous, and I think the unwinding can be and is likely to be brutal, and I think it's going to be global. But in the meantime, hey, it's like worse than watching paint dry. Everybody's asleep and nobody believes anything.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Brian Fowler, President of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the price of oil continues to fall, and here we are in the so-called driving season. Has that disappeared, or is it just we have so much oil sloshing around, prices are bound to go down?
Well, in my world, like we have talked about, if there's, one saving grace, and it's that, we've been spot on commodities. I have said all year that I thought that crude oil had peaked. I've said that, last year as we rallied out of the lows that I thought that it was counter trend and that crude oil would top and move lower. We did get the top back in January. We've seen a couple counter trend rallies since, and we've talked about that. And I said, nope. I think they're counter trend. We're going lower. And so that has been spot on. And, in my world, the reason is the technical setup, the cycles, the charts, the statistics, the cyclical structure, all dictated lower prices, and it's played out according to the script, exactly. And pretty much the same thing with the entire commodity complex is confirming that.
Of course, the oil producers, OPEC, says they're willing to cut production even more. They said their current production cut, 106% compliance. But are they fighting a losing battle?
The charts are going to have their way. And if their cut, let me say it this way. If their cut matters, we're going to see it in the chart. Until we see it in the chart, It doesn't matter. It's just like the manipulation that we're seeing in the extension in equities. You know, it doesn't matter if they're extending. It doesn't matter until it matters, until the charts tell us that we see something that says that equities have topped. It doesn't matter. Until we see something in the charts that says, hey, cyclically, structurally, their cut matters, it doesn't matter. And right now, the structure's broke. Short term, yes, crude oil is getting pretty oversold, and I see some cyclical lows ahead, and we could see a bounce once again. But as of, for looking at the longer term picture, intermediate term picture with crude oil, I maintain the bearish stance. I mean, it still looks like the overall direction there is going to be down for a while.
Do you have any idea how low it's going to go?
You know, it's hard for me to judge that. I originally thought that we would go back below the 16 low. I don't know that. I think that we're going to retest that low. I don't know if we're going to validate or violate that low. But I do still think that at least a retest of that low is on the cards, and that was in the mid-20s. I say on the cards, on the table, and that was, like I said, around $25 basically. So I do think that I think there's more downside, and I just don't know if we're going to violate that low.
We'll have more with Tim Cyclesman Wood right after this.
I'm Bill McWilliam, president of Cascade Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Tim Cyclesman Wood. Tim, I'm hearing very divergent views on gold. Some saying it's going to hit $1,500. Other people are saying it's going to plummet to $700. Well, that's a huge range for it to trade in. What's your view on it?
My view has not changed. Since the identification of the 9-year cycle top in 2011, I've said that gold's going lower. And, you know, we had a pretty exciting low back in late 15, and then we had a pretty exciting low back in December of 16. And as gold rallied out of both of those lows, you know, the gold bugs are waiting in the wings. I mean, there's a lot of excitement about gold. I get it. I'm excited about it myself. But, you know, talking about the 9-year cycle, again, looking at the statistics, looking at the structure, looking at what I see, I do not think we're there yet. And so I do think, based on everything I see today, that we are still going lower. You know, we had the low in May, and pretty strong rally coming out of that. There was a lot of excitement. At one point my phone was really ringing. You know, people were wondering, well, was this it? Could it have been? Could it have been? I said, well, yeah, it could have been, but I don't think so. You know, it's a counter trend rally, and I think we're going lower, and I still think we're going lower now. Short term, as I said with crude oil, I think gold is getting in a window where we should have some sort of a short-term low and another bounce. But I really, really believe that you know, we're still on track to move lower. Ideally, it should take us, I don't know about $700. That'd be quite the collapse. But ideally, you know, looking at it from a structural perspective, we should violate the December 15 low. And once that low is violated, my objective structurally has been met. Then we have to look at the cycles and so forth, and the timing of those cycles, and identify, like I said, the clustering of lows that will make that 9-year cycle low. But the minimum objective I want to see is a violation of the 15 low. Now, that said, and this isn't double speak, this is for the people who have asked me, and I covered this in a couple of updates in detail, with specifics in the some of my short-term updates, but I'll cover it again in the next research letter. But either way, let's say that this time is different. Somehow we've seen the 9-year cycle low. For the people that want to make that argument and say, well, what would it take for you to concede? I'm going to have to see structure. I'm going to have to see the structure prove that to me. And either way, whether we've seen the 9-year cycle low or whether we haven't seen the 9-year cycle low, the telltale sign is going to be this annual cycle, which is due later this year. And once I see, either way, I don't care, that cycle low is going to tell me. And so I have to get to that point before I could even possibly concede. And at this point, there's no reason to change my opinion because I've seen nothing structurally to base such a change on. So again, I think we're going lower.
What about gold stocks?
Gold stocks, I don't think, it's not a hard and fast rule, but gold stocks will, at these lows, sometimes form, like a non-confirmation, if you will, a divergence, kind of like a Dow theory non-confirmation, if you will, with gold at the major tops and bottoms. And so I'm not 100% convinced, based on that phenomena, if you will, and the fact that as hard as gold stocks had been beat down, I'm not convinced that gold stocks themselves are going to make a new low, because they were pretty beaten in early 16. I think they're going to at least approach that low. It may not be violated. That'll be another indication of the 9-year cycle low once we get there.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our very popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.